Here are 5 day trading mistakes virtually every beginner makes. And how do I know this? It's because I made the same mistakes. Let's dive into them. Mistake number 1 is doing no prep work. As a day trader, I want to stack the odds on my side to get a winning trade. And that would include prepping for the trading session. You don't just open your charts, turn your computer on, open your charts, and you place your first trade. What I want to see is the market going to be going up today in this particular market I'm trading, or is it going to be going down? The problem us human beings have is that dopamine is trying to kick in. That's the adrenaline, that's that good feel chemical in the brain that's searching for that feel good factor. And it wants you to place a trade and make a winning trade because so you can feel good. Fight against that dopamine fix, guys. Make sure you prep. Be prepared for your trading day. Those that prepare know where the trend lines are, where support and resistance are, little things like that will help you go on to be a successful trader. Mistake number 2, FOMO. You buy too late in a morning move. As the price goes up, you've missed your original entry and now FOMO's kicking in. And you're thinking, oh no, I'm going to miss this move because it's going to go another 100 points higher. And as you buy it too late, the price comes back down, you get stopped out of the trade, and then it continues in the direction you thought it would have done in the first place. You were searching for that dopamine fix once again, that feel-good pleasure of actually having a winning trade, and you're going to miss out on it. What I would do, if you do miss the original buy signal and it is exploded higher, wait for a pullback, a retracement back maybe to a moving average. What I would do, if you cannot stop yourself taking that trade and you really struggle to stop yourself trading once you've missed the original buy signal, reduce position size and widen the stop. But what I would like you to do is then just sit back, wait for a pullback, because the wave should be down after an impulsive move first. So we go up and then the next wave down and then the next wave up. It's that second wave down, that wave down after the first one, that you can reduce your position size and buy it there and have a wider stop. Okay, so be patient. If you've missed the move, there are thousands and thousands of other trades every single year, week, day, month. There's opportunities everywhere in the market, guys. Don't buy too late because you're only going to get pain, and we don't want to have pain. We want to try and avoid pain. Mistake number 3. Look, I want to have a life. Even though I'm a day trader, I still want to be able to enjoy everything that day trading gives me and the rewards it gives me. So don't trade all day long. You're not going to be able to keep that going for the next 5 years, or let alone the next year. Sitting there over trading all day long is the worst thing you're going to do. You're going to get tired. You're going to just get into trades that you shouldn't really be getting into. You'll be sitting there all on your own thinking, okay, where's the next trade? I'm bored here. Over trading is an account killer. Split the day up. If you're going to do 2 sessions during the day, do the morning and the afternoon session with a break in between. Make sure you take that break, guys. You've got an opportunity for a few hours in the morning to trade. Hit that when you get your trade signal. Manage your trades and do the right thing. Take a break, go and have lunch, go and do something else. And if you're going to trade the afternoon session, start again from fresh, do your prep, look for your trade signal, look for your trade strategy, manage your risk, and basically then split that day up into 2s, okay? Or what I like to do, I'll just do the morning move and then I'm done for the rest of the day. Mistake number 4. You place a day trade and then suddenly the trade starts going against you. You're losing money on the trade. Look, nobody likes that at all. But then you don't get out of the trade. And what you do then, you decide to leave it on for a swing trade. So you're looking for it to come back into profit. And what happens then, the trade gets messier and messier and messier. And now you're trying to hope trade. You're hoping it's going to come back in your favor above your entry. You've turned it into a swing trade. What you should have done is just cut the trade, got out of it. Because look, you're going to have losing trades throughout your trading career. You're going to have to learn how to deal with taking a losing trade mentally. It doesn't mean you're a bad person. It doesn't mean you're a bad trader if you take a losing trade. Most traders that are successful have about a 70% win rate. So that means 30% of their trades are losing trades. Don't turn that day trade into a losing trade, because at some point, guys, it's going to get really painful and it's going to become a bigger losing trade. You'll look back and think, I should have got out of that trade a long time ago. Trading mistake number 5. Scaling in and out of a trade. What that means is that you do more than one trade or one position each trade that you do. Okay, so let's say you're going to buy the market at this level here. The price goes in your direction. A lot of traders get out of the trade too early, maybe because of fear, because they've lost the trade before, and they get out and the account never grows. They're always taking small profits. What really changed it for me, guys, was scaling into trades. So a lot of the time, my first position on a trade might be a smaller trade position size with a wider stop. And as the trade starts to go in my direction, I start to add another trade, another position to it, and then it takes off and I'm in it maybe 3 or 4 positions in one trade. Now that doesn't happen all the time, because most moves when you're trading the markets as a day trader are smaller moves. About 70% of the time, the trades that you trade in intraday are small moves. What you want to do though is go back to mistake number 1. If you prep and you can see there's a potential for a big move in a currency pair, a US stock or whatever market, then you can start to scale into that trade, add to a winning trade. What happens mainly with beginners is they just get out of trades too early and the account never grows. What you should work on is getting good at holding positions with bigger position size, but the same amount of risk. And that takes moving stops up at certain levels. It might be a bit of an advanced trading strategy and technique, but I'll tell you something, when I started scaling into trades, having wider stops, making sure I was managing my overall account risk, there's opportunities every week where these markets can take off, a price could take off and get an explosive move. And instead of you being in it with your small position size at the start, you've accumulated a bigger position, boom, and the account grows really quickly. If you'd like my 5-day trading strategies, I've got a free course below in the description. Make sure you click on the link, guys, subscribe to that, and you'll get that download straight away. If you enjoyed the trading mistakes, guys, don't forget to subscribe to the channel and give us a like.